This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil refiners are making less money selling their gasoline as demand during the peak summer driving season has fallen short of what they expected when many of them boosted production. Softness in gasoline markets have upended years of record profits on selling transportation fuels. In the U.S., the world's largest gasoline market, refiners ramped up sharply, expecting demand that never materialized. U.S. gasoline demand was 9 million barrels per day, BPD, in the first week of June, 1.7% below last year and seasonally the lowest since 2021, government data showed. In Asia, weakness in the gasoline market has already led to run cuts, and refiners elsewhere are also likely to pull back in weeks ahead. This could reduce global demand for crude oil.
Denmark is considering ways to stop a so-called shadow fleet of tankers from carrying Russian oil through the Baltic Sea, the Nordic country said on Monday, triggering a sharp response from Moscow's diplomats who said any such move would be unacceptable. Russia sends about a third of its seaborne oil exports, or 1.5% of global supply, through the Danish straits that sit as a gateway to the Baltic Sea, so any attempt to halt supplies could send oil prices higher and hit the Kremlin's finances. Since Western nations imposed a price cap on Russia's oil in an attempt to curb vital funds for its war in Ukraine, Russia has relied on a fleet of often aging tankers based and insured outside the West.
Moving on to the top news in the energy sector.
Oil prices edged down in Asian trade on Tuesday, after posting gains in the previous session, as markets remain cautious about global demand growth prospects amid expectations of stronger supplies. Global benchmark Brent crude futures slipped 13 cents, or 0.15%, at $84.12 per barrel at 0316 GMT. U.S. West Texas Intermediate crude futures were up 14 cents, or 0.17%, at $80.19 a barrel. Both benchmarks gained around 2% on Monday, closing at their highest since April.
British wind and solar farms exporting power to continental Europe could face CO2 fees from 2026 even though they don't produce any emissions, unless the UK and European Union can agree changes around the EU's carbon border tax. The charges, set out in a little-noticed clause of the CO2 levy law, could hit revenues of renewable energy projects in the UK, add to already high EU power prices and even lead to higher emissions, industry sources and analysts told Reuters. It's a problem on both sides, said Adam Berman, Deputy Director of Industry Group Energy UK. It disincentivizes clean power in the UK at the moment in which we're trying to ramp up provision of clean power. And it's going to increase power prices in Northern Europe. Next, we have the top news in metal markets. China's copper scrap imports have soared due to shortages of concentrate that is processed into refined metal used in the power and construction industries, but record high prices mean U.S. shipments are likely to pause. Smelters in top copper consumer China have faced concentrate shortages since last year when First Quantum lost the right to operate its Cobre mine in Panama, which accounted for 1% of global mine supply in 2022. China's copper waste and scrap imports overall climbed 25% to 783,004 tons in the first 4 months of this year compared to the same period in 2023, according to Trade Data Monitor.
Iron ore futures prices rebounded on Tuesday due to some profit-taking activities following market talks of steel output control in the southern province of Fujian in top consumer China. The most traded September iron ore contract on China's Dalian Commodity Exchange ended morning trade 1.59% higher at 831 yuan and 50 fen, $114.60 a metric ton. The benchmark July iron ore on the Singapore Exchange jumped 2.76% to $108.10 a ton, as of 0353 GMT.
We will now look at the top news in the agricultural sector.
South Dakota farmer Eric Krupa received a flurry of calls from grain dealers and ethanol plants asking to buy the corn locked away in his bins when prices neared 4-1/2 month peaks last month. He sold some, but is waiting for buyers to up the bids to sell more. Prices have since eased and are hovering just above 3-year lows posted in February. After stockpiling crops for much of this season due to low prices, many farmers in the world's largest corn-producing nation continue to shun buyers despite few signs that prices will improve. Grain supplies are ample and early ratings of summer crops are the best in years.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.